everyone thinks about, I got to sell at the top, but what if top isn't 100? What if the top is, 200? You have to have a plan to exit with a
Right.
profit. I mean,
Right.
what's the point? Now, most of my followers, and I'm in this kind of the same mindset is, well, if I sell silver, where do I go to? I don't trust the dollar, right? And that's a tough one to answer, but you can go into hard asset.
Why is there such a big arbitrage? I think China sees this scenario. China is always 5, 6 steps ahead of all of us. They plan ahead. So it sees all this, basically planning ahead, implementing this export control of physical silver starting January 1st, so that if need to be, it will not bleed out physical silver to outside of China. Whatever it imports inside China, so that its industrials can have access to physical silver.
David Morgan is a veteran precious metals analyst and contrarian investor known for his insights on silver markets and hard asset wealth preservation. Morgan explains why investors must plan profit exits instead of guessing market tops. In silver investing, selling at 100 may miss 200. With distrust in fiat dollars, rotating into other hard assets preserves wealth, strategy, and long-term financial security during volatile precious metals markets for disciplined global investors today. Yeung is a precious metals market analyst focused on global silver supply, demand, and geopolitical strategy. Yeung highlights China's long-term strategy in controlling physical silver exports. By restricting silver leaving the country, China protects industrial demand, secures strategic resources, and limits global supply, strengthening its position in future precious metals and manufacturing markets worldwide. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I think there are a few things at play here, Danny. I mentioned that in a show that I did with Vince Lancy, and basically you have the cost or the price of silver. That's one thing, and then the second thing is availability. So you have cost and availability, right? I think the industrials like Elon Musk, Tesla, Space One, whatever else he's doing. They're concerned about both, right? They're concerned about availability and price, okay? Because the price, affects the bottom line, and availability, of course, if they can't get their hands on, doesn't matter what price it is, right? They can't build the freaking thing. In terms of the government, I think they are more concerned about availability rather than price. So given that, this is, I believe it's a fact that China and the US are decoupling, maybe it made a lot of headlines last year, the year before that, and during Trump's first term and the beginning of his second term, right? And it's not really in the headlines today, maybe, but it's a fact that slowly and steadily, sometimes, faster, China and the US are decoupled. So the way I see it is that it doesn't make any sense anymore for the US to send artificially suppressed cheap physical gold and silver, especially silver, to China via the LBMA, okay, or even through South American or Latin American countries, which are in the US, in this view, in Uncle Sam's point of view, those countries are under the US umbrella, right? So like they're thinking, why the heck is China, playing around in our backyard and getting all this physical critical minerals such as silver for cheap? And we saw that, it's just not all talk. I mean, I had this, in my head for almost a year now, like this concept, this narrative.
Right.
But what really clicked is when the American Navy, when the US Navy, essentially confiscated 2 oil tankers from that, left Venezuela that was heading for China. Okay, so if they can do that to oil, think about what else they can do to other critical minerals. And some guy came up to one of my friends and said, "Hey, Eric, they might be able to blockade Venezuela, but they can't do it to the entire American continent." Like that's his counterpoint, right? And I tell you, like they don't need to blockade the entire American continent. They just need to randomly jump on freight carriers that are heading to China full of silver. You see how that works, Daddy? Right? They don't need to blockade the entire continent to do that. And let's say they do that to, I don't know, some whatever ship that is heading to China full of silver from some Latin American country. What is China going to do? Send its navy across the Pacific Ocean to duke it out with the American Navy in its own backyard? That's not going to happen. Okay? So to loop back to your original question, why is there such a big arbitrage? I think China sees this scenario. China is always 5, 6 steps ahead of all of it. They plan ahead. So it sees all this and is basically planning ahead and is implementing this export control of physical silver starting January 1st, so that if need to be, it will not bleed out physical silver to outside of China. Okay, it can keep whatever it imports inside China, so that its industrial can have access to physical silver. China always has some sort of an arbitrage, right, for physical silver price compared to the Western physical silver price. I mean, it's the same for gold. On par, the arbitrage shrinks, but if you look at the chart, a lot of times Chinese silver has a premium compared to Western silver price. So I think given the geopolitical situation that we're in right now, and going forward, I think it's fair to say that China's silver price and potentially gold price will have a persistent premium arbitrage above the Western silver price.
Eric Yeung explains that silver markets are driven by two forces, price and availability. While companies like Tesla worry about both, governments prioritize access to physical supply. As U.S.-China decoupling accelerates, Yeung argues it no longer makes sense for America to allow cheap, suppressed silver to flow to China through global markets like the LBMA or Latin America. Recent U.S. naval actions show critical minerals can be intercepted just like oil. Anticipating this risk, China is moving strategically by restricting silver exports, ensuring imported physical silver remains inside the country to support industrial demand, supply security, and long-term economic resilience. Let's get back to the interview.
Silver will scare you out or wear you out. I mean, there's periods, almost 20 years where after the 1980 peak and then a subsequent high price, really. It went to 50 and the average price in 1980 was $21 per ounce. And then it drifted down to 5 and it stayed around the $5 level for almost 20 years. And, that's a long time to wear you out. I don't think there are too many people thinking about silver for that 2-decade period. But the point I'm making is that it'll scare you out. In other words, it can make these very, very big moves very, very quickly and exceed the expectations of the most ardent bull at times, only to do what it just did on this open, which means we went from, I think, 84 in the access market, and then by the time it got to the New York market, it already dropped like $10 or something. We're still doing this recording as that day's trading has really got several hours to go. So who knows where it's going to close at.
Yes.
So I'm really not that surprised. Personally, I think silver's kind of gotten ahead of itself. We've had these massive moves up, and it's only natural, really, for any market, silver included, that you will see, a back and forth at some point. And I've warned everybody, once this bull market starts again, that the primary purpose of a bull market is to shake off as many investors as possible all the way up, so that whenever this market peak, there won't be too many that rode that bull the whole time. And I am fairly certain we have not seen the ultimate peak in silver yet. There are many that are advocating that's the case. And, you should take all of your silver profits and move it into Bitcoin and all kinds of stuff's out there on the web. I don't pay attention to too much of that, but I have to in a way because I get so many questions from, the general public, but primarily by membership. David, is this true? Is this false? Is this real? What's happening? Blah, 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 blah. And there's so much misgist and skewed information out there. That's very difficult to keep up with it all. As far as separating the wheat from the chaff, I'll say prided myself, but I've done my level-headed human best to stay steady on the tiller, take the strong course, the even way, and not get too emotional because as things move like this, the emotions come out. Surprisingly, a lot of my members that are more conservative, meaning, they don't really use leverage. They are in for the long haul. Their expectations are realistic. Several of them have gone in and asked me about options tradings and what kind of, spreads would I use. I mean, a lot of them have, not a lot, but more than I've ever seen, are asking, what's a good way to leverage these silver investments? And to me, that was an indicator that we're going to get a pullback and we're going to get one fairly quickly. Here we are. I mean, gold is, pretty established. The central banks buy gold. They've been doing it rapidly the last couple of years. That trend continues, and it really is the monetary stability. Whereas silver, as a partially monetary metal, is much more volatile, much more emotional. It's sort of looking at the Dow Jones versus the NASDAQ. I mean, if you remember in the tech wreck, I think the Dow went down 20, 30%, if I recall. The NASDAQ went down something like 80%. So that's a good analogy for the gold and silver market. So I think, I think your core position, especially the older you get, should be gold. As far as silver is concerned, I think you should treat it as more volatile and act appropriately. So let me just outline what I've done for many years. And that is my core position is like 75%. And with 25%, I trade around trying to catch, not day trades. I blow myself up doing day trades, but position trading, I'm pretty good at. And that is where you take, a breakout at 50 and just hold on to it until it exhausts. In other words, you keep moving your stop up as the market moves in the direction that you thought it would. So that's something. It does enforce the idea of taking a profit. Now, I've got a core position that I'm not going to sell until I think, we've gotten there. And just to add on to that a bit, it's very difficult to measure where do I sell my silver, where do I sell my gold? Because I'd say 90% or more of the population, regardless of nationalities, looking at how many yen is it worth, how many Canadian dollars, how many US dollars.
Yeah, right.
And that is the absolute incorrect way to look at it. What you need to do is look at it in how many barrels of oil, how much real estate, how much in the stock market. That's what you want to know. And silver and gold are very underpriced versus the stock market. So let me go on just a minute long. If you were in the Weimar Republic during a true hyperinflationary blow-off, hyperinflationary depression, the stock market went up and up and up and up. So people thought, I'm doing good. I don't have my money in the bank, at least I'm in the stock market. And it protected them somewhat. But if you did the gold stock ratio, what you would find was gold and silver were the only thing that kept you above the inflation. Stocks did not. So from that, we could say perhaps that we could see a blow off in the stock market going up and up and up, and people feel good because, the dollar is declining or gold and silver are moving quickly and they're okay because the stock market keeps going higher. But relative to gold, that's what we want to look at. Where is it? And that again is what you really need to measure. That keeps you grounded. That keeps you in a basis of the real value versus what is the paper price. Not saying that when you cash out, you don't get, fiat in exchange for it. I understand that. But it's what is the ratio? Is my silver overvalued in real estate? If it is, well, maybe I should take a look at selling silver for real estate. Is it overvalued to stocks? If it is, maybe I should consider selling silver or gold for stocks.
Okay.
And that's really, in my mind, the only way to keep grounded and look at it objectively. Otherwise, you're just looking at a number that can be printed to infinity. I mean, honestly, all fiats can go to infinity. Look at Zimbabwe, you look at the Weimar Republic, you look at what happened. Can't name them all, but in my book, The Silver Manifesto, I think we had 8 of them in like the last 20 years, and that book's like 10 years old. So, I mean, this is not something that's a one-off and once every 100 years. It happens fairly often.
David Morgan explains that silver markets are notorious for exhausting investors through long periods of stagnation and sudden, violent price swings. After the 1980 peak, silver drifted near $5 for nearly 20 years, wearing out market participants. He notes that bull markets intentionally shake out investors with sharp rallies and fast pullbacks. Recent interest in leverage signals emotional excess and a natural correction, not a final top. Despite misinformation and hype around alternatives, Morgan believes silver's ultimate peak still lies ahead for disciplined long-term investors. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.